Hello again, everyone. This is Joe Henches with Beyond the Chart, and this is technical analysis of the stock market today, weekend edition. Today is Saturday, January 24th. We're going to take a look at the market the way we usually do on the weekend, which means daily and weekly charts on the indices. We're going to look at the indicators and then some of the market things. I still call them indicators like TLT and the high yield fund and dollar, gold, and crude. And then we're going to look at the three big percentage movers of the stocks I'm closely watching. All right, we're going to start off here with the Dow Industrials, which was down 141 points on Friday. So we had a big move on Thursday. We had 4 days in a row, and then we had a pullback. So again, are we moving up? Are we moving sideways? Are we moving down? What's going on? I've got a mixed count in here. This is a somewhat, on the industrials, I've got somewhat of a bearish, like we're in a fourth intermediate wave corrective action to the downside. I've got an alternate count on the S&P 500. We'll take a look at that in a minute. So right now, this count has a fifth wave completed on December 26, which completes the third intermediate wave up. And I'm now thinking that we are in a 5-wave move up from March 2009, mainly because this peak failed here and we pushed beyond it, and therefore a large ABC or WXY scenario, in my opinion, failed. So I think we're in a 5-wave count to the high side, and that this is a possible third wave here. Over on the S&P 500, we'll look at it in a minute. It's possible that we're still working a third wave. And just to complicate things even more, the New York Composite gives you a different picture. So anyway, that's why we're getting mixed signals. And when you look at this, just think about this for a minute. Let's just circle this area right here. Look at how we're just chopping sideways. We're just rolling back and forth sideways. Now, it does look like we're kind of compressing a little bit. You could almost make the case we're doing a symmetrical triangle. But, that's what we're getting. So overlapping waves, corrective action. Okay, let's go take a look at the S&P 500. Now, here's the alternate count. Instead of peaking a fifth wave here, I think we're still working a fifth wave, which first wave here, 1, 2, and then within the third wave, we're doing a 1, 2, 3 going higher, okay? So this means that, we're still working this on a fifth wave, okay? And so it's somewhere up here. Now, we'll see. We have to get continuation now. We are getting some things, closes above the 10 and, breaking this little trend line. But, we broke this trend line, thought we were breaking down, and then it didn't. It just reversed. So all we can do is continue to watch. I mean, the market sometimes gets very unpredictable. Well, sometimes, a lot of times, most of the time, it's very unpredictable. Okay, let's take a look at the Nasdaq. Similar type thing. The Nasdaq looks like it's trying to break out to high side. 3 closes above the 10. And I like here the way you've got the first 2 closes above the 10 and it broke the high here. Okay. I like to see that. Sometimes you'll get little closes above and then you don't break the high of those 2 days. And then so it's not really telling you anything. New York Composite. Now this is where I'm talking about the fact that a totally different scenario. The New York Composite did not go to new highs. I've talked about that. And we could be working a scenario down too. But again, this is even more of a picture. I mean, if you look at this in terms of let's see if I can do this correctly. In here, even more of a symmetrical triangle that's being compressed. Okay. So it's just, it creates a lot of uncertainty. And that's why, a week ago, my post was titled Crossroads, because we really are at a crossroads. Market, we're trying to figure out, are we getting ready to go higher or are we getting ready to go lower? And the market keeps confusing the picture, although there are some things that are starting to make me think that we're trying to push higher. Okay, Russell 2000, similar type scenario. We're just overlapping waves. Whenever you get overlapping waves like this, it's corrective action, just like what we had in here. Let's see. Let's look at a weekly chart. Weekly chart on the Dow. Okay, we had an inside bar for this last week. Okay, inside the previous week's action, so it's getting a little more compressed. We almost had actually the open and close. The body was almost inside. I'm not sure that it closed 17,511, opened 17,516. So it actually did. We've got the body was even inside this bar. So we're getting a little bit of compression action here on the weekly chart. Where's the S&P weekly? I like to go in the same sequence. Not quite the same case. We're with the weekly here, and again we're back above the 10-week moving average on the S&P 500. Did we get above the? Yeah, we closed above it on the Dow too. The Nasdaq weekly, similar thing, but even stronger. This is why it's a different picture on the Nasdaq. See how the Nasdaq closed above the highs of the last 2 weeks. Okay, so it almost looks like this is trying to make a breakout move to the high side. Now, again, that's because we've had a little bit of a down move. Now, you never know. You get a fake out. You could say, I could have said the same thing right here, right? Wow, we closed above the high of the last 2 weeks, and well, maybe we're going to go. But that was kind of a small little bar in here in terms of trading range, and that was a holiday, December 26th. So sometimes, that's pretty questionable. We'll see whether or not we get any follow through on it. Okay, New York Composite on a weekly basis. Now here's the scenario that's different. To me, the New York Composite on a weekly basis, you really could make the case that we're doing an ABC, WXY, and that we got a big ABC, and this was a big extended wave in here, especially with this fifth wave extended, and that we peaked up here because this high on November 5th was never taken out. Okay, so we could literally be working a high that the market peaked in here. Now, if this thing turns and breaks higher, then that's something totally different. Then everything's confirming a move to the high side. So we just got to watch to see, do we start to, number one, break this high, then do we break this high, and so on and so forth. Okay. The Russell 2000 weekly, now again, inside day, kind of like the inside week, kind of like the Dow Industrials on an inside week. Okay, the body wasn't inside, but again, closing back above the 10-week moving average. Okay, so it's staying above the 10. You get one close and then you close back above. You get one below and you're closing back above. So there's no continuity to the selling in terms of by the end of the week, at least not recently. Okay, so now let's take a look at some of the indicators. Short-term trading index. Where is it? Here we go. Okay, so again, it was moving down on the 10-day, and now it's bounced back up a little bit because we had bearish reading for a one-day reading, 1.68. More than we were getting several readings down in here, down low readings. The VIX collapsing down, and when here we go. Now this is kind of interesting. And when I look at the RSI, this little fishhook pattern like this makes me think that we could have another move to the downside, but there's no guarantees on that type of thing. I mean, sometimes it works, sometimes it doesn't. Here you had like a little fishhook here, but then here you could have said the same thing and then it bounced up. So right now, I mean, we went to a lower low in here. We could be reversing back down, and could be a little bit of confirmation that maybe market is trying to push higher. The high-low, this is kind of interesting. Look at this. So look what's happened the last 2 days. So even though the market sold off yesterday, make sure I got the right reading, 23rd, 289 more new highs than new lows, higher than even on Thursday, when the market was up 260 some points, and then we're down 140, and we have even more new highs. So this kind of action in here with this new highs breaking above even this point here. This point's 284. This went to 289. it's making me think, okay, this is starting to look like it's trying to push higher. The market's getting some strength coming in. Okay, so that's what's giving me some pause. Oh, the put to call ratio, I wanted to mention that. I don't have it in a chart. The 10-day put to call on equities only is 0.66. So that's not an extreme either way in my book. So we're still in the neutral zone on the put to call from a sentiment perspective. All right, so let's take a look at long-term bonds, 20-year Treasury bonds plus. So, we had a couple down days. We've basically been, moving sideways, chopping sideways for the week. High yield fund. Let's see if it's telling us anything. Okay, so this is usually if it's dropping, it means risk off. It's rallying means risk on. And if there's risk on, that means that the stock market's going higher and having a tendency to assume risk. I'd say over the last few weeks, we're kind of going sideways. And really, so a week ago, today was the 20th, right? Have I got... Maybe this isn't updating correctly. I'm not sure why I don't have... Well, okay. So we're back. I guess we did have, a holiday shortened week. That's what's happening. That's what's going on. So this has gone up a little bit over the last week. So it's kind of telling you that, a little bit more of a risk on mode from a high yield bond fund type thing. And then the dollar index, U.S. dollar index, there we are. Wow, look at this. Last 2 days, pushing higher. Now, I mean, this on Thursday, this was on a day when the market was up 260 some points too. So what's going on? Why is this? Well, this is because, again, the ECB, the European Union, the European Central Bank, it has announced the huge quantitative easing that they're doing, buying all the whatever, I can't remember the exact amount. It's a huge amount of bonds that they're buying, and so that weakened the euro, which naturally is strengthening the U.S. dollar against other currencies. So that's what's going on, I think, here. This huge skyrocketing move is continuing this move outside the channel that it had been in. So I probably need to draw another line because we're probably getting a channel that's channeling more to the high side. Let's take a look at gold and crude. And let's see, Spider Gold Shares ETF. This is one we're still in with call options. And it's still trending high to the higher side. I mean, it was down 1 on Friday. But again, it had been up so many, several days in a row. You got to expect some pullback. We'll see how much further we get. I mean, I think we've got more to the upside. It's a part of one of my trade ideas. The details are out on the Trade Ideas webpage. If you're not a subscriber, subscribe. It's very easy to do. And the last one here on the markets we're going to take a look at is United States 12-month Oil Etf. Okay, so this is giving a pretty accurate picture on the oil, and boy, is just hanging right down here, right at the lows. Actually, this may be the lowest close. 23.39 is the lowest close reading on this that I've got. Yep. So crude oil continues to push to the downside. All right, now we're going to take a look at the 3 biggest percentage movers of the day. The first one is Valero Energy. They announced something, I can't remember, I think it was an increase to their dividend or something like that. I can't remember exactly what it was, but big move on percentage-wise anyway, up $2.16 on Friday. I think we had 5 big moves to the upside. Okay, 5 waves for an impulsive wave completed to the upside back here in May 2014. We've been correcting ever since then, and especially got choppy since November. Look at this choppy type action. So my best take, it's possible that the correction is actually over as of October 15th, low down here. We have not gone to a lower low, and that this is a first move up and with corrective action for a wave 2, and that we're working now a 3. And the fact that we're breaking this trend line, this trend line here kind of contains the corrective the corrective wave, this corrective wave right here, okay? And now it looks like we could, could have broken out 1, 2, and now 3. So that's a possibility that I'm entertaining. The other thing that I look at when I look at a this complex, when we do a WXY, okay, what that is, it's like a complex combined correction. A lot of times you'll get a simple correction of A, B, C, and then you're done and it goes, okay? But sometimes after you've had 5 waves, a completed impulse wave, sometimes you do get these complex corrective moves that combine, okay? And they can combine several times, actually. That's why it gets very messy when you get into this type of mode. So what I try to do is I'll look at this and say, okay, what was the length of W? Well, W is here, go back to X. Where does Y equal W? Well, Y equals W right here in terms of points. That's what makes me think also that this may have been the end of this WXY 3-wave corrective mode, and that we are now in a minor wave 1, 2, minor wave 3 to the high side of a new impulse wave. So we'll see if that plays out. That's my take on Valero at the moment. And the next one we're going to look at is FireEye. It had a big move. Now FireEye, it was up, what, $1.39 on Friday. The short-term and intermediates are swinging back up here. The long-term, the 55, is still below the 233, and the 233 is declining. The other thing gives me caution about this, there's a couple things. This looks choppy sideways ever since this big move to the downside. It's back on out of here. You can see we had this island top back up here, very high on March 5th, 2004, and ever since then it's been down, and then it's been chopping sideways. You can almost draw a horizontal line across the bottom down here. Let's just do that just for grins. I mean, you can draw one there, and then you can draw another one across the top here and say, well, everything has been pretty much contained within this box, and if anything, it's actually even squeezed it to a certain degree, and the trading has just gotten tighter in this range down here. Now, this move, you would have thought, well, maybe it's breaking out, but then when I look at the indicators and look at some of the indicators, I'm not really getting confirmation. 2 out of the 3 did not confirm that in terms of this move. Now, it's still trying to trend that way, so we'll see. I don't trust the move, but, it had a nice bullish move on Friday. And the third one we'll take a look at is VipShop. And this is another trade idea, so I'll revisit this in more detail tomorrow. But it had a nice big move on Friday. Been waiting for that. Thought it was going to break out on this day when it broke this trend line. Intraday, pulled back down. Now it seems to be making the move. So I'll talk about this more on the Trade Ideas video tomorrow. All right, that's it for today. Another a little bit lengthy video, but we try to cover a lot on the weekend. So this is Joe for Beyond the Chart. If you felt like the video was helpful, share it. And if you're not a subscriber, just click on the little red box here on the screen and subscribe. Remember, stay focused, follow your plan, and trade without fear. Have a great weekend, everyone.